Hello everyone. Today we are going to discuss about one of the most important interview question. That is nothing but a journal entry for bond. Okay. So let's take an example. If you buy bond at market rupees 10,000. So if the interviewer asks this question to you, so how to answer this question? First, how to think bond will settle on t plus 3. Okay, so how to explain them what is the journal entry for t plus 1 and the t plus 2 days and t plus 3. Okay, so first day, what will be the journal entry? Purchase account data to bond payable account. Why we are debiting purchase account? Because we are buying bond, means that is asset to us. Asset is increasing, means what? We should debit the purchase account. Then why we are crediting bonds payable account? Means we have not paid the amount that will settle on t plus 3. Okay, so we have to pay that amount later. That is nothing but a outstanding has created, so that is liability to us. If liability is increasing, means what? That should be credited. Okay, so what is the journal entry for t plus 1? Purchase account data to bonds payable. Okay, the same. Okay, and the same day itself, okay, accrual interest, we have to accrue the interest on that bond. So what is the journal entry for accrued interest? Accrued interest account data to interest account. Okay, now why we are why we are debiting that accrued interest? Accrued interest means what? We have earned that income on a particular period. Okay, so that is, so we'll get that amount in future. So that is asset to us. If asset is increasing, means what? We have to debit that entry. Okay, that's why we are debiting accrued interest account. Now accrued interest account data to interest account. Okay, why we are crediting interest account? That is liability to us. We have to pay that amount. That's why we are crediting interest account. Okay, now t plus 3, what will happen? Cash will settle. Correct. Now, so you have created one journal entry on t plus 1 day, purchase account data to bond payable account. Now we have received the cash, so we have to close that entry. Correct. So that's why we are passing this journal entry on t plus 3, bond receivable account data to cash account. Now what is happening here? Cash is going out from the business. Correct. So we bought that bond, so we are giving cash to them. Cash is going out of the business. As per the real account rule, debit what comes in, debit what goes out. So cash is going out from the business. That's why we are crediting cash accounts. Cool. Thanks everyone. Hope you understand this journal entry.